What's up, guys? So, I have a new video for you today. We are going to discuss. I don't know if it's the best trading strategy. What is the best trading strategy? It doesn't even matter, but it is definitely one of the best strategies. At least for me, because it is one that I personally really do enjoy and prefer. And I thought I would share it with you today if you're interested. If not, you can skip. Whatever. So, anyway, here it goes. Like I always say, a lot of people think that having a great strategy is the key to winning in the stock market, but I always say the chances are always 50-50. It doesn't matter what strategy you have or not, because you can never be sure what the market will do today, tomorrow, in a couple of weeks, months, years. Which means I will always repeat it and I will always say it. Risk management, money management, patience, and kind of where to put your stop loss and when to take your profit. Probably the most important things, much more important than the strategy itself. Like I said, the strategy is 50-50, but I will show you a strategy which is maybe where the chances of winning are a little bit above 50-50, or at least you can somehow be sure that you will be more often right than wrong, so you don't have to worry that much about the trade itself, whether it will be a winning or a losing trade, but rather you will have to worry about the, well, let me rephrase it. You will have to worry about the money management, or rather you would have more time to take a look at your money management and your risk management, since you can be kind of sure where the market will head. So this is why I like this kind of trading strategy, and because you can simply focus on the, well, let's call it more relevant things that I mentioned earlier, like money management and risk management. So here it goes. So in front of me is the gold market. This is the year 2007, so quite some time ago. But the trade, or what I want to look at is, the market here has been on an uptrend since, well, if you take a look back, since about 1999, 2000, something like this. And we have been consistently on an uptrend. Here we can see we are consistently forming higher highs, higher lows. Then here we had kind of a bigger bullish move that had a degree angle of, let's say, almost, what is this, 110 maybe, something like this. It depends where you put your ankle. If this is 90 degrees and we add like 20 degrees maybe, or if we go from here and call it 70 degrees, doesn't really matter, but we had kind of a very strong bullish uptrend. Now here kind of the same, forming higher highs, higher lows. But what I actually want to focus is now here we had also this kind of bullish bigger move. And suddenly what happened here is we pulled back from and then we rallied again. So we had kind of two very strong bullish trends. But the main focus is what happens after this strong rally here, which is this kind of triangle. Oh well. I mean, triangles are very common in the stock market and people use it a lot. And here we can see if this was our first touch, our second touch, and then our third and fourth touch. So if this was the first retest, the second retest, and the third retest. This here was just, we could call it a breakout or just a normal higher move, because the last time we were this high probably was never, I'm not quite sure. Yeah, well, not too much information on, well, what was this? If we take a look on the monthly chart, so well, 2007 was our year, and so yeah, somewhere along the previous maybe resistance line, so this is where the trade was. If we go back, so yeah, somewhere around here. But so this was likely the resistance area back in 1990, and then we break out. But so we here had 3 retests. We retested the support line like 3 times. This was just the first breakout, whatever you want to call it, and we could make a support line here at the lowest point of the first support retesting, which would be here. Now then we formed here a lower high, went back to more or less the same area to retest the support line. And let's change it, maybe make it like this. Then we formed again a lower high, but we kind of retested the same area. So, and if we look at the triangle here at this point, it gets smaller and smaller, which means we don't have much room left. So at this point we always have to decide, or the market has to decide, whether it will go up or down. But if we take a look, like I said before, on the trend was still very bullish. So I mean, of course you have always to check the market at that time, what it is doing, what might happen. But here we were consistently on a bullish move, and so chances are very likely that we could, or we would have broken out of this triangle and then went higher. So a trade that, if, like I said, chances are here pretty or much higher than usual, since I said it, chances are always 50-50. And even if we say that the chances are here 50-50, like I said, the trend was very bullish, so chances are probably, or were somehow higher than 50-50, since the trend is bullish. So we can assume that we will go higher. I mean, you always have to check the market, the economy, what is happening, but like I said, chances were pretty high that we would have gone higher, and even if not, 50-50 is always a chance. So if we take a trade like this and put a stop loss at the lowest high of the lowest low when retesting the support area was around here, and let's say we enter our trade somewhere in the middle of the triangle, because it always depends. I mean, if you're lucky and catch it here, even better, but let's say we do it here, and let's say we just aim for the highest point of the triangle, we would have a perfect 1-to-2 risk reward ratio, which means this is also one of the most basic, most simplest trades there are, because chances are always 50-50. In this case, I would say they are probably much higher. On top of that, the risk reward is 1-to-2. The entry, you don't even have to think that much about the entry, because you can see the triangle is getting smaller and smaller. Even here, the first lower high after the first support line, you can kind of take the middle, and here again the second lower high after the second retouch, here somewhere in the middle. You could always enter somewhere around here, and you could even adjust your stop loss, so you don't have to think that much about the entry or the stop loss, but at the same time you actually have much more time to spend on those things, because the trades here are more than 50-50 likely in your favor, which means this is why I like this trade, because, and this is a daily chart, this also works on smaller time frames, but if you look at the daily chart, the trade took from if we enter on the 20th of December, we could have exited, well, either on New Year's Eve or maybe on 2nd January, so it's about 10 days for a great trade. And if we let it run even longer, you can say we have here a risk reward of 1-to-5 within 2 weeks, no, 3 weeks, well, yeah, 3 weeks. And if you wanted to wait even longer, well, the risk reward would be 1-to-8. Well, if we make it a little like this for, well, 3 months. I don't know if you want to wait that long. I probably wouldn't, but I would likely target another thing that happens when we see this kind of triangle is, if we take the support line and the highest point, we have, or we get here a line, and if we form here a resistance area and then take the same line that we copied here, the line from the resistance and support area, and place it here, we can see that more or less we had the same height that we did here. So this is why I personally like to trade it like this, where my risk is almost well, here it is almost 5, it could actually be 5 if we go higher, but even just the risk reward of 1-to-4 it's like a present and one of the simplest trade, because you risk, well, it depends how much you risk. Obviously, like I say, you should always risk about, let's say, 1-3%, but here the trade would take you about 3 weeks to get a 1-to-4 risk reward ratio with a simple trade where you can manage your money almost exactly to the dollar. And personally, it's one of the best trades and one of the trades that I really like to use. And like I say, if you don't want to wait that long, it can be used on small time frames as well. But just for the purpose of the video and because it's getting really long, I think. So I'm just showing you these small details. I hope it helps somehow. Well, anyway, thanks for watching.